Hi, I'm Gidget with the Graham team at Crown Point Realty, here to give you an update on the 2020 housing market and for third quarter. We're certainly living in uncertain times, but housing prices continue to rise. So let's investigate why that might be happening. First of all, the median sales price for single-family homes came in at $337,250. That's a year-over-year appreciation of 8.8%. On a national level, the housing prices appreciated 14.8%. The median listing price is $311,800. Both Las Vegas and the national housing markets are experiencing record low inventory levels. Even with the low inventory levels, the Las Vegas Valley sold 12.4% more homes in September 2020 than they did in September 2019. Obviously, demand is high and supply is low, which raises prices. We also believe there's some other factors that might be driving up the housing market. First of all, security. In uncertain times, many people love the security of knowing that they control their own destiny by owning their home. With the rising rents at record high levels, many people are seeking to get out of the rental market into home ownership so they can control what their monthly budget will be. And then the California exodus. Nevada is one of the 6 states receiving the most amount of home buyers leaving the state of California looking for alternative places to live. And lastly, what I think is driving the most is record low interest rates. This quarter, we saw numerous of our clients lock in interest rates on a 30-year mortgage at 2.25% to 2.75%. These are record low levels and make it extremely affordable for most buyers to be able to get in below what they're paying for rent. There are some critical economic factors that we all think that should have been affecting the housing market, such as occupancy rates on the Strip dropping down by 45%, visitor volume down by 57%, canceled conventions and unemployment figures at high levels. But for the last 6 months, housing demand has outpaced the impact of these factors. Good news is that unemployment reduced in September to 12.6%, but the recovery to pre-COVID numbers at 3.7% are not likely until conventions return. Speculation as to why the housing market has been rising with such high unemployment numbers is sadly because the number of unemployment is higher for the lower income levels. That's why housing has not been affected as much. At 1.5 months of single-family home inventory, we are definitely undersupplied. Here's what the Graham team anticipates for third quarter 2020. Second quarter rebounded from COVID-19 impacts quickly. June was up 3.8% year-to-date, and the third quarter was up another 3.8% from June. We're going to stick with a conservative number for the fourth quarter, expecting it to be about 3%. Could depreciation be a factor in fourth quarter? We don't see economic conditions changing that would significantly impact the prices for housing in fourth quarter. On October 15th, the state of Nevada eviction moratorium was lifted. This could impact inventories if investors look to sell once they were able to remove the existing tenants. However, at this time, we have not seen a high level of investors selling, but rather many are still purchasing. If owners are required to sell due to job loss, we do not expect a large wave flooding the market, but rather a steady increase of inventory. This is because of the California exodus continues to flee to our market, taking up that supply. One of the factors that will impact housing is the motivation or need to sell urgently. With over 50% of our homes having greater than 50% of equity nationally, sellers are not necessarily bound to having to sell their homes to be able to get out of the loss. So they're not going to sell on a short price point. They're going to hold out for those top dollars. Many sellers have also refinanced to take advantage of the lower interest rates so they can afford the home they're in versus moving somewhere else to rent. Based upon these two factors, we don't see sellers panicking or fire selling their homes to reduce prices. So the other factor that we need to look at is interest rates. Most economists are looking for interest rates to stay relatively stable for the next 6 months. So for fourth quarter and into first quarter, we're looking for interest rates to stay in the slightly below 3 to 3.5% range. So we also know what goes down must go up eventually. We expect to see interest rates sometime be starting to rise. We have seen the Federal Reserve quit buying mortgage-backed securities. So they are a big buyer of the mortgage-backed industry right now. So as they continue to stop purchasing, that's going to mean we have less demand in the market. As we have less demand, then these interest rates should be rising. So many of our buyers are asking us, is this the right time to purchase a home? For those of you who are blessed to have steady income and a secure employment, if you can accept the potential that prices may fluctuate and you're okay with that because you're looking at a 5-year hold and not in the next 6 months, some of you who get anxious about whether or not it fluctuates in price points, this might be a time to hold out. However, you can never guarantee that prices are not going to fluctuate. So what you're looking at is how long you're going to be living in that home for the next 5 to 10 years and whether or not you want to be investing in your equity or a landlord's equity over those next five years. Do you want to take advantage of the record low interest rates where your purchasing power is increased? The difference between 1% in interest rates is $35,000. So if you go from 3.25 to 4.25, you're losing $35,000 in purchasing power. For many of the buyers, this is the difference for them being able to afford the home in the neighborhood or the size they want, or they're going to have to sacrifice some features like a pool. With record low inventory, if you're a buyer who is needing assistance with closing costs and it can't come from a finance venues like the first time homebuyer program, and you're looking for the seller to contribute those, if you're below $400,000, that is going to be a challenge in today's markets. However, it doesn't make it impossible, and we've successfully negotiated that for many of our clients, but it is going to be a challenge and it will not be an easy one. So that might be something to consider. So our sellers, timing will be important. We are, of course, seeing more online viewers of our homes than ever before. Listing your home before the rush of the next spring, fall, while demand is really high right now and inventory is low, could be an advantage for you. Buyers will come and view your home online. Through the safety protocols that we have in place, we can safely show your home with regards to COVID with masks and gloves and all the things to keep your home safe. So if you want to take advantage of this record low inventory and you know where you want to move your next home to be, call us and we'll let you know how that process may work. Taking advantage right now also gives you some of the advantages of negotiations. So we're seeing less in closing costs, we're seeing less in home repair requests, we're seeing a lot of factors where it's giving sellers a little bit more of an advantage. On behalf of the entire Graham team, thank you for allowing us to be a resource for you. We hope you find this information valuable. Of course, if you have any questions about your particular community or you want to know what's happening in your neighborhood on housing prices, just give us a shout out.